when I am uninspired by what's going on in the market, the first thing I do is like look at all of the asset classes, right? So, from a futures perspective, one of the asset classes that has the most tradable products is foreign exchange. And what I mean by that is like the Tastyworks job or Tastyworks team does a good job of like surfing up the most tradable currencies for us. So there's more to choose from. So if I am like looking for things to do and ways to up my occurrences, that's just naturally an area that I gravitate towards because of the fact that I have more to choose from. So that's kind of where this got started. And then, I thought back to my early days of trading as well, where especially right around now with headlines of inflation rates and changing interest rates and what the Fed is going to do the next few months, a lot of that then like leads into, okay, well, how does that affect the economy and the price of the US dollar? And this is like a natural extension of ways that we can capitalize on those binary events or those knee-jerk reactions. That's a little bit more, right between first and second tier, right? Like we've talked about that before as well. So this is just a natural way for us to kind of get exposure and make assumptions on the US dollar relative to some of these other performing or lagging currencies.
You're exactly right on all of those points. And the one that I think is especially prescient here is the idea that like this market is super easy to have like a single broad idea and then just make it's Tastyworks and everywhere else with the products and the platform, make it so easy for you to go into FX, have an idea on US dollars, and then just like give it a little bit extra oomph here and try something new out. You've got the small US dollar here right around its highs, had a great 2021 here, up considerably from where it started last year. And now the last couple of days, it looked like at the end of 2021, Katie, US dollar was going to start to come back. There was a considerable sell-off. Euro and British pound and the rest of the currencies against the US dollar were moving higher. The first 3 trading days of the year here, US dollar is doing pretty good, getting back near those highs, but still not really blowing out the highs and not going back to prior lows. And so maybe you have a short bias or a long bias here in 2022, but we want to look at, like I said earlier, throwing some hot sauce on it. Thankfully, it's very easy to do so. We'll get to the product suite in a second, but it's really nice to kind of have a similar idea to the S&P 500 where it's like, oh, it's a basket of things. But in the S&P 500, it's like there are 500 things. And so like if I get short the S&P 500 and I want to buy the stocks that I think are good out of that S&P 500 and kind of create a little bit of a spread or deconstruct that stock market, it's a little daunting. It's big. And when you buy those stocks, they're margined at 50 or 100%. It's expensive here. And we'll see here with the US dollar futures from the small exchange, but also the micro FX futures from CME. It's going to be really easy for us to deconstruct this thing, especially when you look at, this is only 7 components, a lot more manageable than 500, right?
For sure. Exactly. You nailed it.
And so
3 ways to say yes.
No, I totally, I appreciate the support here. And we'll get onto a couple of different varying trades in a second. But yeah, just to highlight here, you have the US dollar is the 100% of the pie. And now that US dollar in the SFX futures is chopped up into about 35% US dollar versus euro exposure, about 20% US dollar versus renminbi exposure, which is really hard to come by. So hard to come by that that's the only piece you can't deconstruct, that you can't take out because there's not a renminbi product for you. But that's neither here nor there because we're going to focus on euro, yen, pound, Canadian dollar, Australian dollar, and peso, all the rest of these pieces that have varying exposure in this basket against the US dollar. And you can see, Katie, as we compare the percentage action of all of those components to the action in US dollar, and you can see here, this white line is basically an average of the inverse action of all of these lines. And it makes sense, right? Like the yen in orange being down a lot is the yen being down against the US dollar. So when the yen is down 10%, 10% times the exposure here, which is 16% of the weighting in this basket, is going to push that US dollar higher by whatever percentage. Now, this is really nice to look at because you can see here, I mean, some of these currencies actually positive for the same time frame that we're looking at. And we can start to get a feel for, if I want to be short US dollars, then I can pick out these pieces that I don't want to be long. Or if I want to be long US dollars, I can pick out these pieces that I don't want to be short. Is this all making sense so far?
Yeah, absolutely. I mean, I think this is a great way to kind of visualize and demonstrate what exactly it is we're trying to talk about here. Because as somebody who may be new or might not understand like what an impact, especially when it comes to like weighting, where not everything is equally weighted, this starts to help you build the picture of why the small US dollar product, SFX, is performing so positively within the last year or so compared to the currencies within it.
Yeah, and you can see that the biggest coming from the weightings here, like Katie says, the biggest effect is going to be that euro, yen, pound, and once you start getting into the Canadian dollar and Australian dollar, it's lesser of, and especially down there at less than 5% in the peso, still a considerable amount, but nowhere near that 35% of the euro. And so when you see, that blue line in the euro down 8%. It would be really rough to see a US dollar market that isn't up considerably, seeing as how the biggest weighting is down such a big chunk there. Whereas you have Canadian dollar and sterling, the British pound there, kind of unchanged on the year. Well, they're not huge weightings. They're considerable. British pound at 12%. They're not huge weightings there in the US dollar. And so a lot of this upside that we've seen in US dollars since the start of 2021 is from the weakness in euro and yen, some of the bigger pieces in there. And as we start to take pieces out and deconstruct this thing, you can see that the contrarian in us, Katie, and everybody at home, you can feel free to go in direct opposition to the way that we think on this stuff. Just, we have to put it out there some way. And we're almost always going to put it out in a contrarian mindset. The mindset would be, for 2022, as a reversion play here, I want to be long the weak currencies and I want to be short these stronger currencies that have been performing well. Now you get into this game, Katie, where it's like, okay, well then I need to buy 4 of these markets and sell 2 of these markets to get all this action done. But thankfully with the US dollar futures, you have a kind of a simplified version of this, right? I mean, you can just look at 3 products. You could even whittle it down to 2 products if you want, and the margin all in is going to be less than $500.
Yeah, this is, I love this because so easily you can get turned around with the inverse relationship between these currencies, but you spelled it out so well here. We're taking out the exposure of the strongest performers, the pound and the Canadian dollar. And then by selling that US dollar, we are ideally, hopefully capitalizing on a bounce in the yen, a bounce in the euro, and then a bounce in like the renminbi, because we're not considering peso in this, right? So yeah, I think I got that. And then we're not, here, we're not really all that worried about the Australian dollar, but it is, of course, lumped into this SFX product.
Absolutely. And so what we've done here is I always think it's simpler for people who want to get into an asset class here, like foreign exchange, like Katie, you said, is by and large a second tier mover on a lot of people's boards. And it's on my board as well, probably a second tier mover. But that being said, this is one of the ripest markets with mean reversion, because anything that happens from the Fed on interest rates or happens, in the equity market concerning earnings and all this different stuff really tends to cause like a jolt in foreign exchange markets. But at the end of the day, these are some of the markets that are ripest with mean reversion. They don't tend to go anywhere in the long term. Now, of course, people will say, well, I've seen a pound market up at $2. And during Brexit, we saw a pound market down at $1 and change. But guess what? Now it's right there in the middle at 135. And that's beautiful, especially when you look at an S&P 500, where it's like when the pound was at when the pound was at $2 against the US dollar, the S&P 500 was probably at like 1,000, 1,500, 2,000 right, maybe. And now when Brexit occurs, the S&P 500 is at like 3,000. And now today, S&P 500 is at 4,500. And so it's like a great market for mean reversion. And that's exactly what we're looking for here, which is selling the two SFX, which is in theory getting us long these underperformers here, and then selling the outperformers, taking that exposure out of the market. And you can do this on even simpler if you wanted to just sell one SFX and sell one M6B or sell one MCD, or you can go for it here and look at two short SFX, one short M6B, one short MCD. And those are the micro currencies, which are really, really small and really, really nice companions to the small US dollar futures. And no matter how you cut it, this is going to end up getting you a pretty decently small margin, probably a trade all in. You're going to see P&L movement of like $20 on a daily basis, a nice small trade that hopefully takes into account some longer term reversion in these currencies.
I agree. And I think the other thing to mention here too is like, okay, when you're managing three underlyings at once, it's really easy to start to think about deconstructing these once they're on and like legging in and out of them. And I'm not saying like you shouldn't do that, but ideally you're coming in with this assumption that you're hoping for a bounce in the major currencies that are in the SFX product and removing your exposure in these other two. So just be thoughtful about that. If you're like, well, I'm going to peel off these two pieces, but then lean back into the strength of the Canadian dollar and the pound. It's up to you, like live your life, have a style, whatever. But I'm just saying that's typically not the way that we would approach this. We would look at this from a holistic perspective. Would you agree?
But I do love the disclaimer of like, live your life. It's do what you want, but that's not something I would do. And I agree with you. It's not something I would do either. As we look at this stuff, I mean, that's the type of deconstruction we don't want, Katie. We want something here that like we've created an interesting new trade by deconstructing the index. And now if I put this new trade on here and you can see, I'll look at it right here. I'll show you how to do it. We put two short SFX right in here at 150.05, dollar down a little bit here today. But what's nice about that, Katie, is the other parts that we're selling are up considerably here today, which is the pound and the Canadian dollar. So don't feel like you missed it. I mean, pounds are back. They're through their highs back to 136. And so you didn't really miss it, even though dollar is off its highs. But I sold two SFX and now I go in and I sell one of the M6Bs. That's the micro sterling. You can see that's about the same buying power as one SFX future. And then I always think this is funny, and I don't envy the person who has to make symbology for these different products, but it's all of the currencies are 6A, 6B, 6C, 6E, 6J. And then the micros for the most part are M6B, M6E. Canadian dollar is MCD. It's a McDonald's futures, everybody. But I go in there and I sell one of these and now I've got my full trade on. But yeah, I don't want to get cute with managing this, right? Like taking one of the legs off and then a couple days later, it's like, wait, what am I supposed to, how much did I make in that other one? And how much am I trying to make? This is one where I go to my positions tab and I can see, okay, my P&L open of the first line here is my M6B. I'm down of almost $2. MCD, unchanged on that position. SFX, I'm up $2. And so right now it's at a scratch. I just put this thing on here today, but I keep track of those three markets, the P&L open, and I look for, $50 to $100 all in the reversion of this trade. That all makes sense?
Makes so much sense, Frank.
I'm
really not being sarcastic. I mean that.
No, that is absolutely Katie saying subconsciously, it's 12:31, jackass. Get us off the. I signed up to do this until 12:30, and I don't want to have to go a minute longer. So stop sharing your screen and stop asking me questions about the US dollar. And so I'll do all of those things. We'll get Katie out of here. She is busy as ever, I am sure. And I'm not being sarcastic about that. Katie, we're so happy to have you on every Wednesday. It really is a pleasure. We know that you got a ton of stuff going on, but everybody loves your presence on this. I mean that wholeheartedly, because some of the people I talk to on the network, you go over to Twitter or whatever, and they're like, oh yeah, whatever, that person. People love Katie, absolutely love you. So we're happy to have you.
You're far too kind. I do have to jump off though, because I have to go create the new Instagram that we talked about. So
there we go. Yeah. Groceries on the ground outside of grocery stores. Yeah. There we go. That was better than mine. Mine had twice as many characters. Anyways, Katie, thanks so much for joining us here every Wednesday on Small Stakes. Go follow Katie McGarrigle on Twitter and watch her on the rest of the programs on the Tasty Trade Network. Just support her in general. She's going to tweet out her Venmo and just pay her some money later on today. Thanks, everybody, for watching. Thanks for watching Small Stakes. We'll be back here in a couple minutes, splash into futures, plenty of futures trades to get done with Peter Momat here in a second. Thanks for watching. Stay tuned. Peace.